Now, for more on that, we have joining us today Professor Yang Jun-sok, Professor of Economics from the Catholic University of Korea. Thank you for coming on the show today.
Happy to be here.
So let's start with the numbers from that report. South Korea economy saw a 0.6% growth on quarter for Q3. Now, we know South Korea's economy has been struggling for a little bit of time. What do you make of this announcement? How disappointing is 0.6%, and is it better or worse than you expected?
Okay, it's slightly better than I expected because things have been so bad during the third quarter that I thought it would be a bit lower than the second quarter growth. But the second quarter growth was also 0.6%, so at least it hasn't become worse in a sense. But this does have some really negative aspects. When you look at the individual numbers, there's some good news and some bad news. The good news is that private consumption seems to have risen faster than it did in the second quarter. It rose by 0.6% compared to 0.3% in the last quarter. And any recovery that we're going to have are going to be dependent on private consumption. But on the other hand, 0.6% growth over the last quarter is not a great number either. At the beginning of the year, we were hoping that the private consumption would increase a lot more because we had a very healthy growth in exports last year, but that doesn't seem to be coming true. Another perhaps bit of a good news is that inventory fell by 0.3%. That means there's less goods in the shelves and the warehouses, so there's less likelihood that companies will cut down production. But I think that's overweighed by the bad news that we have, mostly from investment, as the previous story said. Especially the category that concerns me the most is equipment investment. It fell by 4.7%, and that seems to indicate that companies are not very optimistic that exports or consumption will rise. So that at least from where the companies are spending their money, it does seem like the fourth quarter and next year's growth is not going to be all that great either. And we've been hoping a lot that exports will recover, but if we look at the exports for the first 9 months of this year, goods exports went up by 4.7%, but if we take semiconductors out of that, then it actually fell by 1.7%. So the bad news, I think, outweighs the good news, but the numbers are slightly better than I expected.
So numbers slightly better expected for Q3. Now let's look ahead to Q4. So as mentioned in the report, last week the Bank of Korea lowered its growth forecast for 2018 from 2.9% to 2.7%. That means in the fourth quarter it works out South Korea needs 0.82% growth to reach that lowered target. Are we on track to do so, do you think?
I think it's going to be difficult. I won't say impossible, but as we just saw, the exports are going down other than semiconductors, and the sentiment seems to be that it's going to be worse as time goes on. And in the last 2 years, we only had one quarter where the growth was higher than 0.8%. So it's not impossible, but I would not bet on it.
So that's concerning numbers then. Also, let's move on to the stock markets as well. So it's been a tumultuous few days on stock markets everywhere around the world, to be honest. But we saw some big drops and some rebounds. But if we stick with Korea for now, the KOSPI closed out today, dropping further after 4 days of continuous dropping. And now it's reached the lowest level since we've seen since January 2017. Of course, it's not just to Korea. Other Asian markets have also been seeing some decline over the last few days. But how concerning is this as well, on top of everything else?
Okay, well, the global environment for stocks have been a bit shaky since October 11th, when the United States had that large 3 to 4% drop in their stock indices. But I think this particular time, this week, is especially interesting because, in a sense, the global shock didn't start out in the United States. It started out in Asia. U.S. market did drop a little bit on Monday, but it was the large drop we saw in the Asia market on Tuesday, which led the global downturn during the middle of the week. Now, the interesting thing is the U.S. market, at least over yesterday night, seems to have gotten a bit better. It did recover, but Korean market has not. So this does point out that Korea seems to have additional problems in addition to global problems that every country is facing. And even within Asia, I believe the Chinese market has done has recovered slightly today, while Japanese and Korean markets have fallen further. So it does point out that there's a lot of problems specific to Korea. And over the last 2 or 3 weeks, we really got a lot of bad news. Not only the GDP figures that we just talked about, but the Bank of Korea estimations have come out. And the government was really hoping that they would achieve the goal of job creation of 300,000 this year, but that was lowered by 90,000. And then we have the problems with exports, not only the decline in exports in areas other than semiconductors that I mentioned, but also the problems with the Chinese-U.S. trade war. And then the investment has fallen, again, that points out the pessimism that people are feeling. So I think this problem is very specific to Korea, and even if the global market recovers, Korea may not be able to recover as quickly.
That's interesting because the South Korean government and the central bank have been holding regular meetings and emergency meetings as well to try and get a handle on everything that's happening over the last couple of weeks and couple of months as well. And the Bank of Korea says they will be monitoring these fluctuations in the stock market and the global stock market as well and how that affects Korea. But realistically, what can they actually do? Is there anything that the government and the bank can do to try and stabilize what's going on here?
Okay, well, the bank is in a very tough position because right now Korea is in an interest rate reversal where Korean policy rate is lower than U.S. policy rate. Now, policy rate doesn't necessarily mean market rate. Market rate may be higher than the U.S., so it's not as big a problem as people fear, but as long as there is some kind of an interest rate reversal, capital is going to flow outwards. And when the international conditions are unstable or Korean situation in the future does not look good, that outflow may accelerate, and that's what Bank of Korea has been afraid for quite some time. And that's why Bank of Korea has been warning that they might have to raise interest rates. But because of the domestic sluggishness, a lot of people are recommending that perhaps we should ignore the international side and try to lower the rates, or at least hold off on the rate increase as much as possible. But in the last 2 or 3 years, when we tried to lower the interest rate, it didn't really have that much of an effect. The Moon administration, when they came in, they tried to use fiscal policy to try to create good jobs and to try to recover the economy, but that hasn't worked out very well either. I think part of the problem is the type of programs that Moon administration has backed. Because of the oncoming slowdown, we will probably have to use the fiscal policy tools a lot more, but they will probably have to use different type of programs, perhaps more traditional type of fiscal programs, rather than the income support policies or job creation policies, youth job creation policies that the Moon administration has been using. And then in addition, really in order to create good jobs and create expanding markets, Korea has to increase its productivity, its efficiency, and technology. Perhaps we have not been taking care of that as much as we should have. So we need policies like regulatory reform, educational reform. We need more labor market flexibility. But there's a lot of resistance to those type of policies because, well, it upsets a lot of carts. So politically, I'm not sure if that type of policy is possible, and those are all long-term in their payoff, so it might not appeal to politicians who has to get votes every 4 or 5 years, but that's the direction that we have to move in.
You talked a lot about the domestic issues that Korea is having there, but actually, I mean, some of these disappointing numbers come amidst while seems to be a massive trade war happening between the US and China. And many people are saying these disappointing numbers come from the fact that these international uncertainties are affecting it. How much would you say the US-China trade war is affecting the South Korean economy?
Okay, well, Korean trade depends a lot on China. About 25% of Korean exports go to China, and about 45% of Korean GDP is dependent on exports. So that's a large number. But on the other hand, if you look at it from the China's point of view, the numbers are perhaps not as big as what we've been fearing. About 4% of Chinese GDP is dependent on exports to the United States. Now, that's a large number, but China is an economy which, even when they're in a slowdown, grows at 6% a year. So it's going to be bad, but it's not going to be anything that's critical, I think, the trade war. But on the other hand, because they're expecting a lot of shocks in the future, the stock market in China has gone down. There's a lot more nervousness. And even more important than that, the Chinese economic momentum is that the growth is slowing down. They have a lot of internal problems, especially in the financial sector. They have a lot of debt problems with private companies as well as state-owned companies. It's right now, I don't think the real effects from the trade war has hit yet. In fact, exports from China to U.S. has gone up in August and September because American importers want to beat the tariffs. But once the actual shock hits in fourth quarter and next year, it's probably going to get worse, but I think people may be over scared of that situation. Like I said, the exports to the United States is about 4% of GDP for China.
Let's move on to some of the non-Korea issues. So you mentioned earlier about the US stocks. They rebounded a little bit on Thursday. So the Dow Jones and the S&P 500 rallied at just under 2%. But the biggest rise was with the NASDAQ, which rose almost 3%, which was the biggest jump in 7 months. Of course, that comes after the biggest free fall of 4.4% of the NASDAQ, which is the biggest in like almost 7 years. So what do you make of this, Professor? What's going on here?
Okay, I think basically people are very, very nervous, and they're not quite sure exactly what the effect is going to be. Now, the United States has been experiencing a very strong recovery, and various international organizations such as IMF and World Bank estimate that the trade war will cost U.S. about 0.1% in growth. Now, U.S. exports to China is only about 0.6% of their GDP. So even if the trade war becomes full-blown, it may not hit the real economy all that much. But the problem is, I think, inflation. Because China exports so many consumer goods and also so many intermediate goods, once the trade war gets in full, then you're going to see it in the price indices, and that may mean that the Fed may increase the rates more quickly and inflation may rise. And I think that's what the stock market is more afraid of rather than the real effects from the China-US trade war.
So do you think this is just a readjustment, this bounce back up, or is this just another up, but then we're going to continue this trend of further drops?
Well, I'm going to chicken out a bit and say it's a mix. And the reason is that even before the trade war, a lot of people have been concerned that this has been the longest bull market in the U.S. history, and the stock market prices, especially for IT firms, may have been overpriced. So it's those type of feeling that perhaps the stock market has gone on too good for too long, coupled with concerns about China, which is finally acting as a type of a trigger. And then you're going to see some more problems in the EU as well as diplomatic problems with US with China, Soviet Union. So that seems to be making everybody nervous. So people seem to be sometimes too pessimistic and then too optimistic, which is the reason why we're seeing all these large ups and downs.
Interesting. Well, that's where we're going to have to end it. Thank you for coming in today. It's always great to get your insights on the numbers.
Thank you.